Good evening. It's Vijay here. Welcome to our weekend reflections, where I talk about things which is slightly broad-based and slightly macro. And today I would like to dwell upon a topic which is very, very important for all of us: whether cash is king or cash is trash. A famous investor once said, cash is trash because one should always be fully invested in the market. But here, our mutual funds are saying that, cash is king. So let's dig a little bit deeper into what's happening. So we start off with this cartoon, which where this guy is talking about telling his friend on the park bench, saying a large part of my investments are in mutual funds and lottery tickets. Basically, he is equating lottery tickets with mutual funds. Let us see whether this premise is true or it is just a joke. So just let's look at the performance of the Indian mutual funds. This is data from SPIVA, which is considered an industry standard. And if you look at the Indian equity large cap, this is the percentage of underperforming. Okay. So if you take 1 year, 60% of the Indian mutual funds, large cap, underperform the index, that is a Nifty. Then if you take on a 3 year basis, 75% underperform. If you take on a 5 year basis, 93%. SEBI was saying that 93% of traders lose in F&O. Here, 93% of investors will lose if you put in mutual funds vis-a-vis the underlying index. If you take 10 years, it is a little bit better, but 74%. That is three-fourths of the people who are investing in mutual funds lose the edge which they would have got if they had invested directly in the market in only an index fund. Just if you had put your money in index fund or an index ETF, you would have beaten 74% of the mutual funds over a 10-year frame. Then you take the mid cap and small cap. So 54% of the mutual funds underperform. That means only 46% of the mutual funds outperform the baseline index, that is the mid cap index or BSE 200, whichever they have as their baseline index. So if you go to 10 years, it goes to 88%. Again, look at the numbers. You see, 88% of people will not be able to beat the index if they are investing in a mutual fund. This is a pathetic performance. We are not talking of 1 year, 2 year, 3 year. We are talking of 3, 1, 3, 5, and 10 years. So have a look at this chart, reflect on it. Are you really putting money in a vehicle which is really going to give you money long term? Because mutual funds always talk of long term, and the performance is none the better. So now this reason why I'm talking of cash is trash is because this news item, cash holdings with equity mutual funds soar for a fifth month. They have surged to 7.2% highest since May 2021. That means in the last 5 months, since December, the mutual funds kitty is only increasing and they're not putting it in stocks. There was a commentary and there was a program on Friday evening where CNBC talked of mutual funds are sitting on 2.15 lakh crores in cash. If you want to know who these guys are, now SBI Mutual Fund is topping with 36,000 crores. ICICI Pru, these are the two big boys. They're holding a 28,000 crores. Then PPFAS, which is very popular mutual fund, holding 24,000, and HDFC holding about 25,000. If you look at it in terms of proportions of their holding vis-a-vis what their assets under management, PPFAS is holding nearly 24%. This is April end I'm talking of in cash. Motilal Oswal 17.5% and Quant is 13%. And typically mutual funds hold about 2.5%, not more than 5% in the best of the times or the worst of the times, as you may recall. But here these funds are holding 24% in case of PPFAMS. Then what is Parag Parikh? That is Parag Parikh mutual fund. In the past also, for instance, even in October, they were holding, as of August 2024, they were holding about 18% in cash. Even when the market is bullish and it was going up in August, they were holding 18%. If their and market is now again started a bull run, they're holding much higher. So I don't know when they're going to really invest. See, they could be putting their money in cash and cash equivalents where they may be getting 6 to 7%, but that is not what an equity mutual fund is supposed to do. Again, have a look at it, take some time, and then come back. Now we'll talk about the head honchos of mutual fund guys, why they are misleading the poor mutual fund guys. So this is Mr. Narain, Executive Director of ICICI Pru, which is one of the largest mutual funds. So this was a very famous speech he made end of January, where he said, "We think it's a clear time to take out lock, stock, and barrel from small and mid caps." But he says, "I'm unable to convince my sales colleagues. I tried my best, but failed miserably." If you are the executive director of the mutual fund, you have to convince your colleagues, either fire them or you resign. That is what any good mutual fund manager should do. But then this is India, new India, where you get paid for holding AUM. So this is what these guys just don't perform their fiduciary duties. Now just let's look at, since Mr. Narain said it in end January, what has happened to the mid cap mutual fund. Of course, it fell on that day. It tried to rise after budget, and then it was in a slightly lower numbers vis-a-vis what he said. But look at it where we are now. So 10%, it's gone up. Let us say if you had not believed him and kept your SIPs going, and if you had not sold any of our mid cap funds which are managed by ICICI Pru, you would win 10% up since he said. And if you look at small cap, it is 8% up from the day when he made that speech. So these guys are called legends, but legends are clearly misleading in this case. Of course, no one can predict the market, but if you make some major statements like that, you have to be held responsible, because when you are successful, everybody praises you. When you are a failure, the mirror should be shown to you. Now let's look at another guy who comes on TV very regularly, who's head of Kotak Mutual Fund, Nilesh Shah. On the day of the market when it crashed because of the tariffs, he said, "Keep cash to buy in the correction, but don't be in a hurry to deploy." This was on April 8th. Don't be in a hurry to deploy. This is the guy whom people look up to. People pour money into the mutual fund. This guy's got 30 years experience. Even I've got 30 years of experience. But he said, don't be in a hurry to deploy. Now, what has happened subsequent to that? This is the day when he said that. Subsequent to that, the Nifty has gone up by 14%. So when will you deploy? You're not in a hurry to deploy. You'll keep cash. For how long will you hold cash? So that is the question which we should ask ourselves. And let's look at the PMS guys, who are supposed to be more smart than the mutual funds. So we are just looking at this again on April end 2025. So value-based PMS guys, they hold 50% cash. Why are they saying that? Valuations are stretched, no margin of safety. Already the indices have moved up 16%. And you're still saying no margin of safety. It's gone. Now you'll probably leave them all. Macro thematic funds, 30%. They're awaiting Fed pivot and rate clarity. Fed will pivot when it has to pivot. Why should we bother so much about Fed when Fed is on an easing spree? 30% cash. Bearish focused PMS, those guys also are not investing in either in the negative or in the positive. So 55%, they're predicting major correction ahead. This is end April. Subsequently, we've had Pahalgam and its impact. We've had a skirmish with Pakistan. Yet, these guys are still worrying about a major correction. So when is cash king or cash is trash? In the business world, that is, corporates should have enough amount of cash to deploy when they see opportunities. There, cash is king. In the investment world, cash is definitely trash, because you will lose opportunities when the opportunities are in plenty. So one of the reasons why I'm very bullish on the market is because when we talk of cash in the sidelines, clearly data shows us that cash is on the sidelines, record amount of cash. So every decline, these fellows will be forced to buy. If they don't buy, they'll buy at higher levels, and then FOMO will happen and the market will take off. So I would suggest, I'm not a SEBI registered advisor. I'm just an ordinary guy. I would only suggest that you look at this data and make up your mind. My mind has been made up, and you know what my mind is saying. Every single day, we are only buyers. Tomorrow also, we will be looking at buying on decline. And I've identified a couple of stocks, which I will put it on my Telegram channel. No recommendations there. What we are buying is what I'm saying there. So Again, we'll be buying some select stocks tomorrow for medium term. Plus, the day trading is always there. The BTFD is on. So I am bullish as usual. So whatever you do, I hope it is successful. This is Vijay here, signing off. Thank you for joining me.